What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Jesse. Is it Futia? Is that how you pronounce it?
Yeah, Dan, great job. First hit. There you go.
Awesome. So that's the second reason why I'm in a great mood today. The other reason is because today I'm joined by my very favorite audience member. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, all that kind of stuff. Now, why would I do such a silly thing though? Well, if you find out that in order to get access off-market, private 506B deals, you need a documented prior substantive relationship, then you know you have to find out what people are up to before you can share these deals. And the good thing for you is that we also get a few ways for you to effectively communicate on the subject of commercial real estate. But before we get too excited about Jesse's business, Jesse, do you want to say a thing or two about yourself before we get going on real estate?
Yeah, absolutely, Dan. So just quick 30 seconds about me. Born and raised in upstate New York. I got into real estate in college. My father and I bought my college house together. No real estate experience. This was like 2015. He had no prior experience. I had none, but we bought my college house together. I lived in it, rented it to all of my friends. And then we scaled that portfolio. Today, it's one of the largest student housing portfolios in upstate New York. And now we've made the jump to commercial real estate syndication, where I've syndicated RV parks, mobile home parks, and self-storage facilities over the last 18 to 24 months. So
That's awesome. That's a great way to get started. And of course, you're demonstrating that you're highly motivated, which is the first segment here. But I got to say, but wait, check your 8. Jesse, I don't know if you can see through your camera and into the user's device. It's down there at their your 8, their 5, but there might be this hideous subscribe button that they might want to do something. Okay, it's a stupid joke. I don't know why I do it in every episode. But the 5 distinct motivations. I've interviewed and spoken to a whole whack of different players in commercial real estate, and everybody has their own unique why. But at the same time, I find that they neatly fit into these 5 different distinct motivations. And the reason why it's really important to know what they are is because commercial real estate deals take months. There's lots of risks involved. You got to make sure that people are actually going to follow through. So that's why I got to know, why are you doing this? The first motivation that some people have is preservation of purchasing power. What's that all about? Well, some people already have a portfolio of assets, and the way that they make ends meet is not from a W-2, it's from the profits of ownership. And when that's the case, the only reason why you're going to go through the hassle of making your next acquisition is either because inflation is rearing its ugly head and eating away at the purchasing power of your cash flow, or you're able to buy at a steep discount because of an asset crash or distress or something like that. That is not my motivation. My one is this next one, trading time directly for wealth. I got a background in technology, specifically it's the CRM industry, and that's how I got into real estate back in 2014. Of course, it was the kind where you actually accept credit card transactions, so it's not just emailing, even though we were emailing 5 million emails a month, and that's not an exaggeration. But the problem was, as I was watching my boss flip 10 houses a month, I was thinking, wait a second, I seem to be paying more in tax than anybody else. So how can I pivot where I'm getting rewarded in the form of deployed capital, aka equity, instead of salary or high wages? So that's why I'm doing this, but that's a little abstract for some people. Now, especially the youngsters, they tend to be attracted to commercial real estate because they see a whole bunch of numbers floating around. They think, hey, there's a place for me. And they're thinking fast track retirement. But a lot of other people get into this business because a better way to express it is taking control of your schedule. Maybe that means working fewer months per year. Maybe that means working fewer weeks per month. But regardless, you want to take that back and eventually basically dial back a little bit. And that's fantastic. But it's in stark contrast to this next group. They're just plain ambitious. They want to buy their entire hometown. They want that generational wealth to make sure that their great grandchildren never have to hold a day job. And that's why they're going to hustle into their 90s. So they're very powerful members of any team. But that's the fourth. But the fifth, the different motivation, it's people who they, instead of just focusing on their family or skyscrapers with their names on it or something like that, they found a sector of society, or maybe it's animals, maybe it's the environment, who knows what it is, but they figured out that you need a very substantial financial backing if you're going to make a really big impact. So that's why they're making their acquisitions. So Jesse, you're still under 30, so I don't know about retirement, but of those five different motivations, what jumped out to you? What do you think describes you best?
Yeah, I think which one hits home for me is the trading time for money. I mean, I want to be the person and I want to help other people. I talk about this a lot, but waking up where I want, when I want, not waking up on an alarm, doing what I want to do, 7 days a week. And I think that's the huge why behind, financial freedom, not just for me, but for my family as well. We're not constrained. We can go wherever we want. We can go on vacation when we want. I think the power of that is such incredibly amazing. And I think so many people who only live the W-2 lifestyle, working 9 to 5 for 30, 40, 50 years, whatever it is, probably will never get to experience that. And it's just a terrible thing, if you ask me, Dan.
I absolutely agree. I couldn't agree more. But of course, the problem is there's plenty of risks inside real estate because you're dealing with nature. Nature is as much variety as you're going to find. And if you've ever filled out the questionnaire to be involved in a 506B deal, any securities attorney is going to insist that you answer a whole whack of really invasive financial questions. But the one question in that questionnaire that I didn't feel really did a great job of what it was supposed to achieve was figuring out your tolerance for risk. And because, again, these take months, there's plenty of risks involved, I got to make sure that people understand the risks involved. So please fill in this blank. There are many popular investment asset classes, but I think blank is too risky. So Jesse, inside real estate, outside real estate, what's too risky for you?
I think it's too risky. Maybe this isn't the answer you're looking for, Dan, but I think it's too risky not to take the risk. And what I mean by that, and I'm not pinpointing a specific asset class here, but if you just do the same thing for the next 40 years and you don't ever try to push outside that comfort zone or push out to do something new, or man, I'm going to try this new investment, or I'm going to try this new hobby, I'm going to build this new passion project. I don't know what people are going to say about it. People are going to think it might fail, it might succeed. The greatest risk of all is just remaining inside your comfort zone and not risking to invest in something else. And when I look at that from my perspective, I'm 27 years old, I'll be 28 in July. I think there's no greater time to take risk than on like the south side of 40, in my opinion. I have the next 60 years to recover if I have to. Like every single one of us should be taking risk right now. And I think that is the greatest risk of all, is not taking that risk. Not sure if that's the answer you're looking for, or what your thoughts are.
Oh, definitely. And I thought the direction you were going to go in is, just because of inflation, like standing still, if you just, save your money, like that whole nest egg, it's decreasing in value every single day. And same with the W-2. So I absolutely love that answer. I'm just eating it up just like a subscribe sandwich. This thing just kills me. Every single time. It's very subtle, right? You never imagine what I'm up to. But this is when we go to the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial deal. You can go to dandoesdeals.com and get your own one for free. And the reason why you'd want to print it out and share it with your friends, your family, all that kind of stuff, is because it helps you effectively communicate on the subject of commercial real estate. And like a complete dummy, I don't even ask for your email address, which from a marketing perspective, that's the worst thing you could possibly do. You always want to ask for some sort of contact information in return for your freebie. But I don't, because I want it to be super simple. And there's only 6 rolls on this die, and I go through all 6 sides in every episode because that way you'll know how my guest fits into these deals. So let's get started. The repositioner is an acquisitions person. They're looking at a bunch of different properties all the time. They're doing a bunch of paperwork. What are they doing with this paperwork, you may ask, but probably not. Well, they're underwriting the deal. Fancy word, huh? That means they're doing the math. They're doing the arithmetic to figure out, first of all, hey, is this property even making the amount of money that the broker slash seller claims that it is? Because they might be sneaking some extra months in there, even though it's supposed to be 1 year's income, different things like that. And that can be a big problem. So the repositioner, they're doing the math to figure out where is there some upside we can find on this property so it's making more money. Now, one thing that's a little confusing for people just coming in at first is, why do all these repositioners have all of these financier or investor relations? Financiers are people just like banks, they're lenders, people who only deal with paper and money. They are not on the GP team, they're not involved in the day-to-day operations or anything like that. But repositioners have to have great financier relations, because if you can get a more advantageous loan, that goes straight to the bottom line. In other words, profitability of the building. So repositioners are doing that all the time. But the more obvious part of what repositioners do is they get an operations team in there and they stop those Benjamins from going down the toilet. But of course, there's a lot more to operations than just unclogging toilets and mowing lawns and collecting rent. One of the things that is one of my fortes is the marketing side of things, because of my CRM and content creation background. And that's really important if there's a vacancy issue. And that even happens if you're outsourcing your property management to a third party, like 100 units plus, that's what you usually do. And of course, other automations are things that I can do because of my programming and CRM experience. But the problem with trying to optimize your operations is that commercial real estate is very competitive. It's an old industry, so there's probably not going to be enough upside. So many repositioners will then look to a contractor team to upgrade the units, to do a value add or renovate. And why do they do that? Well, if you've got an upgraded unit, the next resident is most likely more than happy to pay more in rent than the previous one because it's nicer. But you can spend and spend and spend on contractors, and it won't necessarily turn into return on investment. Like if you're gold plating toilets, then that's just a waste of money. But somebody has to keep an eye on them. And I don't know about you, and if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because you bet that will not be me. I'd still be stuck at an airport in an hour or two. So I need to rely on somebody else who can keep the contractors accountable, make sure they're not cutting corners, make sure they're keeping the schedule, make sure they're not using subgrade materials, but also making sure that the operations are actually doing what they say they are. Their photos aren't photoshopped or something like that. But when the repositioner has a property in mind, they have this team in mind, they turn around to the financiers and say, hey, I've got this 350 unit apartment complex that I want to pick up. It's worth tens of millions of dollars. You don't happen to have, say, I don't know, tens of millions of dollars you want to lend us? Well, the financier is going to have one other big question on their mind, which I haven't answered yet, which is, who is the sponsor? Who is the KP? What's that all about? Let's get in a hypothetical for a second. Let's say you're a physician or an engineer or something like that. You got some friends, you want to pool your resources to take over a commercial property. The snag to your little plan is that to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. In other words, if you're buying a 350 unit apartment complex, somebody has to already own one, or the bank is just plain gonna say no. On top of that, you need a balance sheet among the GP team of at least the amount of the loan. Sometimes that's why you have a KP involved. It's just for the balance sheet. But on top of that, you need a certain amount of liquidity. But if you have that whole team and all those pieces, you've got yourself a commercial real estate deal. So Jesse, as far as you and your organization goes, you went into some background about your student housing. Which roles do you and your team take care of?
Yeah, we do a bunch of different ones. I mean, I think a lot with the boots on the ground piece is huge, which we do a lot with. And then also the sponsorship team as well. Not to the KP level yet, hopefully soon here. That's definitely a goal for me, but strictly just from the GP sponsor side, and then partnering with other GPs and sponsors as well to kind of build and fill those gaps and close those gaps. Exactly what you're talking about there. So.
I love it. I love it. And so we have a bunch of virtual assistants who watch this show to add people into their investor database. And the next part that we always go over is the buy box, the ideal property. And when commercial real estate players are talking to each other and say, hey, what you looking for? What's your buy box? What's your ideal property? We're really asking about three main things. First one's geography. Where is it? Which state, which county, possibly even which neighborhood. Okay, that's definitely going to matter before somebody calls it ideal. The second one's going to be size. And most of my guests on this show, they're in the multifamily, in other words, apartment complex side of real estate. And so because of that, we use unit count as the indicator of size. And that's because, you know, people who take over 5-unit apartment complexes are completely different from ones who take over 150 unit apartment complexes. So that size matters. There's other forms of commercial where they'll go off of square footage like industrial or warehousing, things like that. But that size definitely matters. But the third one is called class. And honestly, one of my pet peeves is when people use the same word for a couple completely different things. So I split it up into two separate words, which are condition and area. Condition has to do with how old is the building? How beat up is the building? Is it, you know, really bare bones and no frills, or is it full of amenities and luxuries? Okay, that's the condition. The area is more specifically talking about what's the crime rate like where the property is located? What about the school districts where the property is located? And then, of course, desirability in general has to do with how many people go by that property on any given day. But both the condition and the area are ranked the same way as in grade school, where you got A plus at the top and then A and then A minus and B plus and so on. So Jesse, as far as you and your organization goes, you know, like again, you mentioned student housing, which is still a form of multifamily, but what's easier to say yes to and more difficult to say no to?
I think it's easier to say yes to Class B properties, and that's what we look for. Opportunities that add value that aren't in like the prime state right now. And then I think the hardest ones for us to say yes to are Class A properties, to be honest, for the blatant reason of where we're at in the market cycle. And for us personally, there's just not enough meat on the bone with Class A properties. We look for opportunities to improve the property, you know, curb appeal, aesthetics, whatever, appliances, if it's multifamily, kitchens, bathrooms, you know, any type of renovations that we can drive those rents to drive gross revenue, net operating income, and eventually returns for our investors.
I love it. I love it. So the next question then, it has to do with who are you helping or who are you best suited to help? And honestly, my favorite part of commercial real estate is that because it's multifaceted, you got these different sides and nobody's going to be all 6 sides for any meaningful amount of time. So we're all eager to build these teams, give referrals, but at the same time, because our skill sets are unique, we're better suited to help some people more than others. Me personally, because of my tech background, mass marketing, all that kind of stuff. The sponsors and KPs are the people I'm most eager to get to know. And of course, the locals are super important because once again, I'm from the internet. But Jesse, I don't know if you have any 506B deals going on. It's not wise to entice investors, and you're definitely not allowed to talk about the deal itself if it's a 506B. So you don't want to entice investors. So if you have any donuts, don't wave it in front of the camera because I'd be very enticed by some donuts right about now. But as far as people in the industry, you know, you can also say like people just beginning or whatever, but who are you best suited to help?
I think I help a wide range of people from all ends of the spectrum, beginner people, sponsors. Obviously, I'm very active on LinkedIn and I drive a lot of content on there, helping sponsorship teams meet more investors and connect with people and start to raise capital through social media, which I love doing and helping. And then I think a lot of my content really does focus around people going 0 to 1, which in my opinion is the hardest, most challenging part of the real estate investment journey, is just going 0 to 1. So I think opposite ends of the spectrum, but I think a wide variety of helping actual investors get off the ground with their first property, and then helping sponsors and key partners raise capital and build a larger presence on social media.
I love how you put that because, like, that 0 to 1. Like I like to put it how there's a bunch of chicken or the egg situations. Just like when you're getting your first job. Oh well, you need experience to get a job. Well, you need a job to get experience, and in real
Yep.
estate, it's very very similar. So I really like that. But the next question then has to do with how to reach out. And me, I got this distinct last name. I'm easy to find, just like Jesse. I'm on LinkedIn pretty much all the time. But if you scan this QR code, that goes to the FAQs page of 506BME, which is the platform I offer people to take care of the documentation of your substantive relations inside these different syndications. And it doesn't matter if you're only doing B's or C's. Regardless, it's a really good idea to have some sort of proof that you knew your investors' appetite for risk, core competencies, and all that kind of stuff. So that's the best way to reach out to me. Jesse, you already mentioned LinkedIn. I don't know if there's a better platform to reach out. Like if you get killed in the DMs there all the time, I imagine. But how should people reach out to you?
Yeah, I mean, reach out to me on LinkedIn. I mean, comment on my posts or engage with me, and I'll engage with you back. I don't have a VA that works with me. If it's me hitting you back, it's the real Jesse Futia, Dan. Okay, if it's in the DMs or if it's in the comments or whatever, I do get crushed, and I try to stay on top of it the best I can. But just mention that you know Dan and that you're a fan of 506B me, and I'll hit you back instantly. So.
Exactly. It's a very good idea. And that brings me to the last thing. It's actually not for you, Jesse. It's a public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs, perhaps like migraine like symptoms, I'm confident it's the hideous subscribe button to blame. And all you have to do is you hit it and it just goes away and it's free, which is amazing. But of course, I want people to hit it because if enough people do, then YouTube will start to pay for these videos instead of me, which I think would be absolutely amazing. As far as trade-offs go, what it really means is that my videos might show up on your list of suggestions, but you can go ahead and ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Jesse, I appreciate you joining me today. This has been great.
Dan, it was a blast. Thanks for having me on, brother. Really appreciate it.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.